Hi everyone, my name is Eric Bowman and today we are talking about defined benefit pensions. If you misunderstand defined benefit pensions and make an incorrect choice, you could end up receiving significantly less in pension dollars over a lifetime of retirement. So what is a defined benefit pension? A defined benefit pension is a retirement plan offered by employers, both private and governmental, that provide a certain level of a guaranteed output at retirement. For example, you could receive a lump sum payout or one of many income choices. Some of those income choices are things like joint life and 100% survivorship, joint life and 75% survivorship, joint life and 50% survivorship, 10-year period certain, and some plans even offer significantly more choices than that. It's extremely important to understand your choices so you don't leave significant money on the table that could be detrimental to your retirement income. When you're considering which income choice to take, you must consider many factors. First of all, your marital status is extremely important. If you have a spouse that requires income if you were to pass away first, you may consider one of the joint life and survivorship options. Let's say that you had a single life option, and a single life option simply means that the pension is going to pay out over the lifetime of a single life. That would be the pension participant. So if that pension participant was going to receive $2,200 per month in a pension, if they took the joint life and 100% survivorship, they're going to find out that there's a reduction in the amount that you get. It might be something like $2,000 a month instead of $2,200. At first glance, that might not sound like a big deal, but if we add those numbers up, we can see that that is a huge forfeiture. For example, under that scenario where you have a 2,200 single life option and a 2,000 joint life and 100% survivorship option, that's a forfeiture of $200 per month or $2,400 per year, $24,000 in 10 years, and a forfeiture of $48,000 over a 20-year period. $48,000 is significant money that could be utilized efficiently in retirement. Now, that may not give you all the answers you need to be able to make a decision on which one of those income choices you need to make, but be aware that the lump sum option, which is the ability to take a lump sum of cash from the pension and you will not receive an income stream over the course of retirement, can be an extremely dangerous option to pick. However, there are instances where it can be very beneficial as well. You need to do a lot of calculations to understand what your income potential generation could be from the lump sum and compare it to the pension that you would otherwise receive in the form of an income stream. We have to remember, though, that if you take a lump sum pension, you have an opportunity to invest those dollars and potentially earn a rate of return. Likewise, if you invest those lump sum dollars, you could also lose money, which could have a negative impact on your overall income potential in retirement. So there are many things that you need to be thinking about when it comes to defined benefit pension plans, and one of the most important is how do they calculate your benefits. Usually, the three variables that are involved are your age at retirement, your highest average salary calculation, and what your years of service are, or how many years you've worked for that employer. The plans will typically combine those three factors together and arrive at a percentage of your income that you were receiving while you were employed. And then they'll calculate all of those other options based off of that number. I hope that you found this to be very helpful. If you're considering making a choice for a defined benefit pension soon, you may want to consider pension maximization strategies. In addition, you might want to check out our Facebook group called Retirement Simplified, where we're discussing all sorts of topics on retirement, and we'd love to see you there as well. Have a great day, and thanks for watching.
To watch other webinars, go to BowmanFinancialStrategies.com and learn about topics like Social Security maximization, Roth conversions, and tax-efficient distribution strategies in retirement.